Warning. Viewer discretion is advised. The following is a CNBC puff piece, also known as native advertising, intended to get customers to buy more this holiday season. Even the analysts admit the numbers don't match inflation from last year's numbers. But it gets even deeper. Let's take a look.
It's Cyber Monday today, and can the supply chain keep up with demand? Joining us right now to talk holiday shopping from a logistics standpoint is Craig Foreman, the North American president of e-commerce at DHL Supply Chain.
Happy Cyber Monday. So far it's been a great.
Okay, the setup is that he is about to talk about supply chain, inventory, and discounts. Even though he works at DHL, they might know something about volume, but they're not going to know anything about sales. It's red flag number one.
Season so far.
You know, that's really interesting because I was looking at those numbers. 9.2 billion. If it's up 2% or 2.1%, I mean that's not even keeping pace with inflation. We're talking about inflation.
Notice the point is they're trying to get to this conversation about how sales are up and inventories are extremely high.
It's probably north of 8%, but you're just tracking pure volume.
Yeah, not necessarily on Black Friday. We're pretty much on par across the business. Gives and take to that, obviously, with some customers up, some customers down, which is how that probably is helping some of the total sales figures that you're seeing as well.
Can you talk, I know you can't talk about customers in particular, but what type? Last year we were dealing with a situation where people had a lot of money and there just wasn't enough inventory. What's it look like this year?
Yeah.
That's a lie. That is a lie. All right, hold on. Let's let him finish.
It's the exact opposite. Every year, as you mentioned last year.
All right, he just said it was the exact opposite. All right, you take a look and see what inventory levels were last year to now. Let's take a look at that. We can see it right there, provided by Trade Economics. Right there, we are in the negative on inventories, okay? All the way over there to my left is December, the highest point. Inventories last year were at their highest point ever. Okay, let's look at this one other chart, okay? Just get myself out of this. Okay, you can see very, very clearly right there that our current inventory levels are just about on average, which what they have been over the past 5 years, and that December of 2021 was the highest inventory levels we ever had. My first instinct when I saw this was that I had to look into the numbers more quickly, because one of the reasons why we didn't have 3 straight quarters of recessionary activity, which would include Q4, Q1 2022, and Q2 2022, is absolutely because the inventories were so high, they were at an all-time high, that it drove our GDP up. Okay, so now imagine what's happening with our GDP right now. Why they're having this conversation. He's going to reveal it right at the end, why they're talking about this. This has much more to do with having a discussion with the shareholders to get them ready for unbelievably not good numbers, as well as trying to sell this Cyber Monday way more than he knows anybody's going to take advantage of it for. So this is a puff piece, native advertising, and it's meant to sell you more Christmas goods. But let's let Mr. Foreman here just finish up what he has to say.
Yeah, it's the exact opposite. Every year, as you mentioned, last year was suppressed. Inventory suppressed sales this year, but right now inventory is at the highest point that I've ever seen it with our retailers, which is giving them motivation to drive volume and to drive the right discounts. Obviously not at the point to inhibit their bottom line, but they definitely have some motivation to move inventory.
Well, there you have it, folks. Another one of those shill pieces. It looks like we can take our cues and understand that most likely our sales numbers for this Christmas are going to be disappointing. So that means in January, we're going to have major downtrends, which we were already expecting. That Q4, it would want to be one of the last times we were going to get really good earnings reports coming from Q3. And it really does look like this kind of advertising triggers to me that if they have to sell and shill this way, there's definitely some bad news on the horizon. Just keeping aware that we're probably a month or 2 away from having to get that news. So it's great to be ahead of schedule. All right, people. Peace.
For the record, I'm done trying to make y'all comfortable. For the record, you ain't trying to grow, then it's done for you. For the record, lab on me going all the way. For the record, ain't trying to link, no time to waste. For the record.